oil marketing companies headed? Consolidation, strategic disinvestment? Does it make sense to sell some government stake in oil marketing companies? And the joker in the pack, I mean, it's not a joker in the pack, the elephant in the room, let me put it this way, is crude. Crude prices are now sitting at a multi-month high. Debasish Mishra joins us now, partner with Deloitte, and we also have Harshvardhan Dole, Vice President with IIFL Securities. Mr. Mishra, good morning. It's your first time in our studio, so very warm welcome. Thank you for joining us. Crude. Nobody knows. If I'm asking everybody, they're saying nobody frankly knows.
Yeah, it's back to where it was before the attack. And today I think the Brent is back to around $63, $64 after shooting up 20% the day after the attack. And I mean, as you said, structurally probably there is an inherent belief that it's an oversupplied market. And OPEC has been going on cutting their supply. And 4 years back, there were more than 33 barrels a day, million barrels a day. Today they are around 29.5. And the company and the country which has taken the maximum hit in giving away markets here is Saudi and Saudi Aramco. And despite all that, and such a big geopolitical event happening, attack on the largest oil processing facility, oil is back where it was before the attack. So there is an inherent belief that oil would remain in this range. And there are, global factors like, EV destroying demand. Then yesterday, Prime Minister also mentioned about India's move towards banning single-use plastic. All those things are dampener to long-term demand for oil. So the belief is that unless there are large event-based, spikes, oil would remain in this range. So.
Just looking at all the chatter coming in, and like my colleague as well was highlighting, it seems that the government's mandate is very clear. They are looking at divesting oil PSUs, and they want to better the valuations before going about doing that. And they also obviously want to bring their stake down from 51%. Do you think there is a case per se when you are saying that the long-term prospects of oil itself look challenging for strategic divestment? I know it's much the need of the hour from an economic point of view, but is it going to be an easy task?
So it depends on which segment of the oil value chain you are looking at. So if it's an upstream company, obviously when I'm saying that oil has structural challenges in it may not go up, that affects an upstream company's financial viability. But India as a market, the per capita energy consumption is still so low. So there is a huge market potential, both on the retail side, also on the petrochemical side, because the per capita petrochemical consumption is probably 1/3 of the world average. So there is a huge potential there. So you have to make a distinction between upstream company and a midstream and downstream company. So there the difference is. So already a couple of budgets back, government made that announcement that there will be mega merger of oil PSU. They did one of them when ONGC picked up HPCL. So government may be thinking in that direction, or a completely a strategic disinvestment where actual privatization of one of those companies. So.
Harshvardhan, let me bring you in as well, and get your perspective. Firstly, on how all of these factors are also impacting the valuations of some of these oil PSUs. What's the immediate way forward as you see it?
There is no doubt that some of these PSUs are really trading cheap. But the key point is, if you were to forecast their normalized earnings, three key factors, which is crude oil, forex, and essentially the GRMs. These being volatile, their underlying earnings are therefore likely to be volatile. Now, take theoretically case of BPCL. The earnings swings of BPCL are so sensitive to changes in $1 GRM that it leads to almost 8 to 10% change in the underlying EBITDA into net profit. So how does one, a value investor or a long-term portfolio investor, even ascribe a value in such a volatile environment is going to be the key call. And that is clearly reflected in the lower valuation multiples for some of these companies. The way we are seeing it, there is an intrinsic value to every firm. And we are trying to assess that through, ascribing a dividend yield support. So when BPCL was trading at, say, 350, the implied dividend yield was almost 5.5%. which was fairly attractive. And that's where we kind of, unwound our negative stance on some of these PSUs and said that, these are sort of tactical plays in volatile markets. Disinvestment actually holds a great importance for unlocking value of some of these PSUs. If the government walks the talk and kind of, sells BPCL or any other oil PSU to a strategic investor, I think huge value can be unlocked. But the call is going to be when and whether it is strictly going to be a strategic investor.
Then earlier the attempt of privatizing HPCL, BPCL, when Arun Shourie was the disinvestment minister, it failed. Then NDA-1 tried to bring out a transparent policy where oil prices were completely deregularized, but the minute oil prices they started going higher, that entire attempt also got defeated. So do you think one side is to be realistic and second side is to be optimistic? Both of us are optimistic. We want these companies to create more value, but if I get realistic, do you think it's easier said than done?
See, the legal impediments to, divest some of these companies are behind. So in May 2015, the act by which these companies were nationalized has been repealed. So by issuing an executive order or even without going to the parliament, government can, take up the strategic divestment or strategic sale for HPCL or BPCL. More BPCL because HPCL is now owned by ONGC. So in theory, all the legal impediments are behind. I think what will drive the whole process is basically eagerness or political will. And that is, anybody's call whether it will happen or not. So the legal impediments are certainly behind.
It's a business, the oil marketing business is a business where the SRs have tried and they've taken the investment back. Reliance has tried, nothing has really succeeded in terms of a big bang, attempt. Shell tried something, nothing has happened. Can I say that this is a business where maybe investment would be difficult to draw because this is a business which is a dying business because if the fossil fuel consumption starts coming down, eventually it's a business where there would be problems?
No, it's about new entrants vis-a-vis an incumbent player. So if these companies have around 55,000 petrol pumps or so. Yeah. I mean, these three oil companies in themselves. And they have an overwhelming market share, more than probably 95%. So for a new player to come in, buy real estate, create a new facility is difficult. But somebody to buy them, there are enough possibilities. I mean, now it will transition into, all those CNG stations. Then probably the same places will be used for EV charging stations. And then there are retail plays.
It's a distribution which is important.
Yeah, so it's a retail play. Basically, you can do enormous amount of things. And they're already, selling financial products through those channels. And there are enough possibilities there. So it's a very attractive proposition from those market and those customer touch points. So recreating them may be very difficult today, but they are seriously sitting on some, real good real estate and real good market access there. So,
Harshvardhan, the old school thinking always was that India's energy sector they need to be protected by the government and no private sector should be allowed. Do you think it's time to really move away from that old school thinking?
I think government through IOCL and now HPCL effectively will still end up controlling 70% stake in when it comes to distribution of the sensitive fuel, which is auto fuels, and of course LPG and so on and so forth. So even if they were to let go one PSU, I don't think so. It's going to be a huge risk to energy security of India. That's point number one. And if private sector were actually to come and set up shops in India, their placement cost has to be fairly competitive versus a PSU. And replicating the whole value chain, as the other speaker said, is going to be extremely cumbersome task. So why not, open up the infrastructure or basically, divest some of the PSUs? It makes a lot of immense sense, even from a sectoral perspective. And per se, I don't think so. By letting go one PSU, whole energy security is basically going to be at risk.
Debasish, you want to add in something?
No, exactly. I agree with him. And, combining two of them, in fact, can create a major problem in terms of overwhelming market. One player having serious, dominance market share. So, yeah.
So when you take a look at valuations versus assets, do you feel there is enough scope there, to attract, whether it be even overseas investors? The government has been talking possibly about that. Is that something that we could see?
Yeah, this is a space where we believe that there will be enough interest from overseas investors. And government has opened up the upstream investment, made help and other rounds very attractive, but still, given the vision, the view about long-term oil prices and how difficult it is to develop the upstream assets in India, there's very little interest. But as I said, India as a market is very attractive. Per capita energy consumption, the future story about anything, whether it is gas-based transition or electric vehicle, everything, if you have access to consumer, and that itself is a very attractive proposition. So if you open it up, there will be enough interest, I guess. So.
Okay, so just before we wind up then, Harshvardhan, your favorite or your top pick then among the refiners?
So I think the way these stocks have gone up, clearly, buying into OMCs now will carry a lot of event risk, and only those investors should buy into OMCs now who are willing to take a leap of faith that these OMCs will be privatized. As a fundamental investor, I think better entry point will be when dividend yields start to get attractive and one is not pricing in possibility of privatization into these valuations. So as of now, my sectoral pick is we like RIL, which is our top pick. We like Gujarat Gas, and I think BPCL is a dark horse, which should continue to do well if this news flow on privatization were to continue.
Thank you, gentlemen, for joining us this morning. Good to get an in-depth perspective on some of these companies and the way forward. We need to take a very quick break. We'll be back in a moment.